Alright guys, welcome back. This week I'm just going to share with you some of my own analysis, my pre-market analysis, and some of the things that I'm looking at in the markets this week. Going into tomorrow's live room, we'll be paying attention to some of these setups. There's quite a bit on the radar. I'm going to share with you a few things, a couple of structure-based trades, one structure-based trade, and a couple of pattern formations, which I know you guys enjoy. So you know, there's lots. We are going to keep going with the educational stuff, and feel free to leave a comment below this video for anything that you'd like to see me release a video on. We've got tons and tons lined up already, but keep firing in the comments below and subjects that you guys would like to see some more content on, and we'll be happy to create some videos on that. But the purpose of this video, I thought I'd chop it up a bit because there's tons and tons of videos on the internet of hindsight traders, right? It's all good looking at the markets after it's happened and saying, you know, you should have done this, you should have done that. We want to be transparent with you and show you what real trading analysis is like. You know, sometimes we're wrong, sometimes we're right. Okay, so I'm going to share with you some of the things I'm looking at. So enjoy the analysis, and at the end of the video, at the end of the short video, I'm going to be sharing with you an announcement which I think lots of you will benefit from. So sit back, enjoy the analysis, and I'll talk to you in a minute. Right, so the first thing I want to share with you, it's a structure-based trade, trend continuation style trade on the New Zealand dollar. And what we're looking at here is essentially we started to break down. We put in this head and shoulders formation, which we identified in the live room. We had a little double top up here as well, broke down, put in the second shoulder, broke the neckline, and we was looking for entry reasons into a short trade. Now, as you can see, we've recently put in this new low here, and if we look left, the next level of support is down here at 69.80s. So if we're to make a prediction, we know that market's likely to test this level. We know that these structure levels are like magnets, and we know that market moves in two ways. It either goes straight down, or we can get a pullback and we can look to jump on the pullback and ride this market down. And that's essentially what we've done. We've pushed up. So as we go down to the trading time frame, which in this case is the 60 minute time frame, we can start to build out a kill zone here. Now, first area I look at, I'm going to bring on some arrow tools here. First area I look at is previous structure support, right? So we're dropping down to our trading time frame. We're identifying a previous structure support level, and I'm going to start to build out this kill zone here. Now, for me, I have a maximum stop loss limit of 100 pips. So if my stop loss is to go an ATR, one ATR above the previous high, so my stop loss is going to be up at 72.15, which means I can enter at 71.15, right? So this kill zone is fine for my maximum 100 pips stop loss rule, but what I want to do is I want to get over a 1-to-1 risk reward. So what I do is bring on my Fibonacci retracement tool, not to use for the ratios, but I just like to use it to build out that minimum 1-to-1. So I can work out where my minimum 1-to-1 entry would go. Delete that off. Let's color this in red so you guys can see that it represents a risk. Let's thicken this up a bit as well. And now I know that if I enter at this level here, I'm going to get over a 1-to-1 if I'm shooting for a retest of the lows. Remember, I'm just going to be shooting for a retest of the lows for target 1s. Okay, now target 2s I can put down at that lower level that we're looking at on the higher time frame, but target 1s will be a retest of the lows, and I know that I'm going to get just over a 1-to-1 in this zone here. So I narrow down my kill zone, and what I'll do in this area is look for RSI to go overbought. Okay, and then I'll be looking for a lower low, lower close candle entry, and that all has to happen in this zone here. Now, if you're looking for some more confluence, we can bring on some tools. If we throw on a fib retracement tool from this swing high to swing low, you're going to see that we get a 382 retracement at that level. One other thing we can do is bring on a fib retracement from this most recent swing high to swing low, and you're going to see that we get a 618 retracement lining up with that 382 as well. So we've got a nice bit of confluence in there, two major Fibonacci ratios, retracement ratios at that level. So for you Fibonacci ratio traders, you've got some confluence in this zone. Now what we're essentially doing is trying to build out some confirmation in this area and narrow down this kill zone. Trying to think like the other traders, trying to build out as much confluence in this zone as possible, so we can identify where markets are likely to react. Now, one thing I do like to bring on is an equal measured move, so an ABCD formation. If we bring on our line tool here, you're going to see that it's a bit higher, okay, but we still don't violate the previous outside return. And what you're going to see is something known as the fib inversion trade. Now I know some of you guys are familiar with the fib inversion. You're looking for this little complex pop back up here, and you can see that if you bring on your fib extension and use it as an inversion, you're going to get a 1618 inversion up at this level, lining up with the equal measured move. And what you can also do is bring on your fib extension tool and go from the low to swing high and back down. You're going to see you've got a 1414 lining up in that area as well. So depending on what you're looking at here, there's a couple of opportunities. Fibonacci inversion traders will be looking at this level here at 7169. And if you're a bit more aggressive and you trade off Fibonacci ratios, then you're looking at this level at market. For me personally, anywhere in this zone, as long as RSI goes overbought and I get a lower low, lower close candle, I can get involved in this trade. We'll just have to wait and see what happens. Now, if we do continue to push up here, there's something for everyone here. There's something for everyone here, because if you trade advanced patterns, then you're going to see that there's a back completion up at the 886, which is up at 7181 for the back pattern completion. And if you're using this pattern as an entry reason into a longer term trade, then you might use the back pattern as your entry, looking to take targets at a retest of the lows. So a couple of things setting up there, something to pay attention to for many different traders. Lots of you guys have different styles. This is certainly something I'll be paying attention to into the London live room in the morning. So that's the New Zealand dollar. The next pair I want to show you is the dollar yen. So if we're looking at the dollar yen, this is a very simple pattern trade. So if we bring on our fib retracement tool, you're going to see that we hit the 50% retracement here. So you're looking at a bullish bat formation up at X to A to B, B to C, CD completion down here at 103.46, and stops would have to go below X. And if you're looking for conventional targets, then you'd be looking at the 382 up at 103.85, and if you take two targets, you'd be looking at 618 for the 104.08. So that's a very simple bullish bat formation on the dollar yen. And the last thing, there's quite a lot on the radar, but I just want to share with you a few things. And the last one I'm going to share with you is on the euro yen. It's the last pair I'm going to share with you guys this evening. but we're looking at a bearish bat formation on this as well as we consolidate, looking at X to A to B, B to C, and a CD completion up at 114.93. So those are a few of many things that are on the radar going into tomorrow. We'll pay attention to these in the London live room, and we'll see how we get on. All right, so hopefully you enjoyed that. You got some value from that. That's a few of the things that I'm looking at going into tomorrow's live room. And if you want to come into the live room, feel free. It's completely free for your first week. You just go to tradingpower.co.uk/London-live-room and click on, or go to tradingpower.co.uk and you'll see the big London live room banner. Remember, don't forget to subscribe to this channel and also my own YouTube channel, which is Jason Greystone. There'll be content over there, not just trading related, but more business stuff as well for you guys who are into entrepreneurship or startup businesses, anything like that. So be sure to check that out. And lastly, I want to make sure that you guys are all signed up for Charles Miles' event that he's hosting tomorrow night. So there's only a few places left on that. So you need to go over to tradingpower.com, click on the Learn to Trade tab, and you can register for that event there. Charles Miles is hosting it tomorrow night. If you're in the UK, it's night time. But be sure to go and click on that. It's completely free, and he's going to be going through some of the basics of reading price action and how to read a price chart. So very, very valuable information, completely free. You guys go over and register for that now. And until next week's video, take care, and I'll see you then.